Week number 4 of the year. We have a look at the Forex calendar and the volatility pockets of the week, and also have a look at direction. I'm starting off with Danske Bank research. On a weekly basis, they publish net redemption and issuance of bonds in the Eurozone. It usually gives us an idea if euros are moving in or out. A negative cash flow would mean there is a higher demand for euro and tends to help the euro a little bit, and a positive would mean the opposite. Next week we have a really light, near to balanced 1.9 billion deficit, but going in the next following 4 weeks we have over 80 billion deficit, so I'm assuming that usually tends to help euro's upside as there will be more demand building. We have a look at Scotiabank's CFTC report. Aggregate USD shorts are just shy of what we reached in last August before EURUSD turned away. That's sort of a, if you had to look at it in technical analysis, that's sort of a peak, and there's a lot of fear, specifically with the euro, that these long positions can turn back and create an outsized EURUSD move, and not only EURUSD but all other assets and risk assets correlated. The catalyst for it isn't clear just now. The last few weeks EURUSD hasn't been trading very well, but positions have been keep adding. We've seen something very similar in 2018, where in January it was the same scenario. Positions was continuously building up, EURUSD wasn't declining, and that didn't not happen until April. So there was full 2-3 months of continuously chop with a bullish bias until something snapped in euro, and then that big release came. So until then, that big release comes and the catalyst will be so obvious there will be no need for interpretation. I'm staying bullish on the euro, as this is a positive cyclical environment we have. It's a reflation trade that's still continuing, albeit some roadblocks with the vaccination, and all of the bad knowns are known, and we're looking forward for euro to capture a bit more upside in the following week. We're having again a little bit more look at data. Again, biggest position build is really from the euro, with a bit of yen bullishness as well, but the majority is coming from the euro side. Last week we had a little bit of euro shorts trimming back, so euro shorts added but longs added too. And on the pound side it was the opposite, where longs and shorts trimmed a little bit, mainly given that the post-Brexit agreement doesn't seem to work at the border. Seems to be a lot of traffic, a lot of goods not moving as smoothly as they should, and that's creating huge supply constraints in the kingdom right now. These bottlenecks hopefully will resolve very soon, but as it stands now, that is creating a huge drag on how manufacturers and retailers are operating, and it creates a little bit of an upset for them. If they're trying to do business but the goods are not coming through, if they don't have goods they can't sell, it's self-perpetuating. That seems to be weighing on the pound. If you look at the headlines are more focused on what vaccination is doing. So UK is well ahead in the vaccinations, one of the strongest, followed by United States. So vaccination is going well. However, Boris Johnson lately said that economy might not fully back open until later in summer. Again, a lot of knowns are unknown, and the negative yield scenario that was building up from the Bank of England as well, that has been priced out. So we feels like a little bit pound is in the middle of, there's a lot of good already happened, and there's a lot of bad already priced in as well. We're a bit of equilibrium here. Needs something to tip the scale for the pound to make a significant move. The key for pound moving is EURGBP, which I will discuss in once we head on over to the charts and have a look over them. But keep that in mind where pound is right now. It's got great potential to have some outsized moves, but there are catalysts in the short term that could really wreak some havoc, specifically because we have near over a billion position built. There are fresh positions built over mostly 135, 136 area by the reports I'm hearing. So they're quite vulnerable, where euro longs have been building it from a lower base. So the euro long positions have a stronger hand at the moment. AUD positioning very light, NZD a little bit more bullish, have been keep creeping up, mainly because of the way that inflation has been surprising lately, and that probably tends to keep the RBNZ on the back foot. So there's a lot of positives going on for the NZD. However, on the charts already moved quite a good bit as well, so there's not a lot to expect on the NZD front in the short term. Having a look at real yields, we usually tend to look at the 10-year yield to get a gauge on where the gold is headed. So lower values have inverse correlation with the gold. If you see these values moving lower, so if 0.99 becomes -1, that tends to be positive for gold as well. Currently gold has somewhat decoupled since August, I would say, because of the yield curve moving up, but consensus is ahead of the FOMC that gold finds a bit and moves a little bit higher towards 1880, possibly 1900 and above going into the event. Lastly, have a look at inflation expectations. I've overlaid the chart with AUD/USD as it tends to have a strong correlation with most of the commodity currencies. As you can see, that the inflation expectation took a dip and AUD/USD is a little bit hanging behind. It doesn't necessarily mean that inflation expectation peaked here, but it is looking very, very frothy. There is not a lot to like on the upside in this particular scenario until we see another bump higher, which will come out of the yields market, which, as far as I understand, it is tied down to a very narrow range for the next few months. Metals aren't moving a lot, so I find it hard to believe AUD/USD makes a material move higher without any of these catalysts. But having a look at the chart, since ECB last meeting, it came out a little bit less dovish than anticipated. So they said they have this big package, they might not need all of it, they might not use all of it, but if it's needed they will. They're seeing the economy behaving really badly into April and picking up after that. So everyone who's holding long euro will be looking at that scenario where anything changes about the April onwards projections. If those turn sour, then we find that euro longs might liquidate as well. But it's not the base case. Base case is for now going to next week that post the ECB meeting, we had this range here built up and this blue zone which had a London fix. I believe that this range will create a base for it to move higher towards the 22 and 2240 area. My understanding is that this area will not pose too significant of an issue and it should get eaten up either before or post FOMC. However, first target to look for profits will be ideally under 2240 going into the beginning of the week. I'll have a look for the calendar in a second, but that was just the continuation of what happened on ECB, as there's still a bit of a post-rally likely left over in the EURUSD. Having a look at EURGBP, very critical. So we had this level at 88.30. That was pretty much on every analyst sheet who was writing to their customers and on everybody's eyes. It rejected it as one would assume that there's some profit taking. Going forward, there are a few things that everybody's looking at to see if EURGBP can actually crack lower and head for 86, as it's more the medium term call. From what I'm seeing and what I'm understanding right now, there seems to be a Herculean struggle trying to break lower levels now in EURGBP, specifically because euro is bid right now. I like to think that these highs get taken out and the move accelerates back up into the 90s, possibly 91. If price moves back into that zone, I'd be looking to see how sentiment behaves and might even go long on a counter trend trade to capture higher. The good thing is you have a narrow range of finding out if you're right or wrong, because if that breaks, you're very likely 88.30 breaks, and then you have a smooth sailing move all the way down into the 86, 87 area, which something we were looking at for a longer period of time. But there was a bit of a sentiment shift last week. Data wasn't as pretty, and the lockdowns are really tiring out the economy in the United Kingdom. That tends to create a bit of a sort of negative friction. Talking about negative, next week starting Monday there will be the old President Trump will have his impeachment hearing, which isn't necessarily negative. What's negative is that the impeachment hearing will come before the stimulus hearing, where everybody was anticipating there will be maybe talk about stimulus, and to get the stimulus going, that will help the economy, free money, yada yada. But the third thing will be another thing ahead of the stimulus that might create a little bit of a negative sentiment, tends to help EURGBP higher. But as a whole, market is not expecting that the stimulus will come through earlier than March or so. So I wouldn't put too much emphasis of what the stimulus news will come out. On the positive side, again, before I have a look at the calendar, the positive side with EURUSD is we've been trading in a extremely choppy range for quite some time, probably most of this year, to be honest. Kind of traded back into where it was in the beginning of December, started a bounce, and what is happening is there's been a lot of heavy positioning, and analysts started to get very wary that maybe this breakout is not coming anymore. Yeah, flashbacks from 2018. A lot of analysts are telling their customers, take risk off. If you have a long position, start trimming it. A move higher needs a catalyst, and it's difficult to come by. So that's a good thing if you're bullish, because you want that sort of thing. You don't want the analyst to be all bullish into a move like that, because it usually tends to fade away. Positioning gets too heavy, and usually the other thing happens. So if mostly market participants are a bit worried that this move higher could happen, but they're not interested to short either, most of the times I've seen the scenario play out that EURUSD will tend to go actually higher and even break even higher above 23. Most on the dynamic, that most analysts starting to become fearful on the core ideas because market hasn't been moving. They become a little bit sluggish, and they just prefer to keep the customers safe and reduce risk sentiment, which is a safe thing to do in the long run. Again, this pattern was really consistent. I've seen it in the past where there was bullish calls and the market wasn't moving as much, and then they take their bullish cards away. All of a sudden, market starts busting higher. Again, the good thing is in EURUSD is because it's such heavy positioned, if there is going to be a downside move, it's going to be so huge, so many 100 pips, possibly near to 600-700 pips lower if the position on right comes. Then you have plenty of opportunities to short it in case this doesn't go higher. In any other case, it could just chop about like it did in 2018, which isn't ideal, but it still should mean that we should see a move higher into 22 before it really plays the like standard resistance support sort of noise area, if you capture what I'm trying to say. Let's have a look at the calendar. Starting on Monday, there's nothing that interests me. President Lagarde is going to be speaking after the fix. Maybe tune in, but most of the things she says is a bit lengthy, chewing the fat, and doesn't really create loads of substance. I don't believe she has got much to say at the time being. She really just wants to wait it out, see how things come, see how data comes through, and then starts getting more aggressive with her wording. She really just tries to wait things out, so I wouldn't expect too much coming out of her on that date. Moving on to Tuesday, I really like the unemployment data from the UK. The usual pattern has been the last 2 or 3 readings that once the news comes out, EURGBP actually drops. So let me bring up the chart for EURGBP. EURGBP tends to drop once the data is through. I'll show you probably the last reading will make a little bit more sense. The last time we had that was 15th of December, and it wasn't just because the number was good. Last time the number was a bit of upset, but still EURGBP managed to drop. So data tends to come out around in the morning, and once the data came out, EURGBP made a bit of a bounce and then kind of dropped before it made a bigger move higher. So consistent with that, I'm hoping that by Tuesday, morning, I see a dip into this area, and I'll be really keen to see if this level holds or breaks, because if it holds, this is going to create a huge difference for where EURGBP will be headed in the short term and in the weeks to come. This might act as a support here. If it breaks, there's loads of downside way that you can capture there all the way to 87, 86. So incredible time to be trading that asset, as it's I wouldn't say an inflection point, but it's at a point where it can create good momentum within its own defined ranges. So that's the first data I'm looking at going into Tuesday, and the sort of reaction I'm anticipating. Then we have the Australian CPI. I never trade the Australian CPI because it's a quarter on quarter. By the time it comes through, it's so outdated and not so important anymore. The whole overall outlook for the CPI wasn't that bright either. I'm really more interested to see what commodities do, what yuan does to understand what Australian dollar is doing. Talking of yuan, so USD-CHN has done absolutely nothing for most of this year. Has dropped a bit, came back up, has dropped a bit, came back up. So you can see it's trying to force its way higher, but lower is easier to come as well. It has got no real incentive. One of the key things is obviously the People Bank of China. They have came out and said they're kind of happy at the levels where yuan is trading, and that probably means it can hold these ranges for a little bit longer. However, if you're trading AUD, I would keep a keen eye on what yuan will be doing. If you're going to see a break higher here, it would be very interesting what AUD does. The overall trend is still lower, so you'll find that a lot of investors will try to capture a little bit more downside on USD-CNH. If we see a good spike up, you're probably more thinking about starting to short it or buy AUD-USD instead of doing the opposite. But that would be your gauge to what to look out for when it comes to Australian dollar, when it comes to the yuan, and overall sort of the risk sentiment we're playing at just now. As it's just been consolidating, if you may, even a bit of a bearish flag, eyeballing it, but really nothing concrete just yet. Emphasis is really more downside, as there's a lot of money flowing into China, into the bond market, in the stock market. Talking of money flows, one of the reasons I've recently read that yuan is depreciating a little bit was because that investors and people in China are selling the yuan to buy Hong Kong dollar to invest in their stock market. That sort of creates the southbound flows, that's what they call it. That created a sort of distortion that can carry on for quite some time. I would like to think that it will kind of stop before the Chinese New Year starts, but I believe it's the 11th of February, or sort of mid-February. So I like to think that these flows stop. They won't last forever, and then once that happens, you will find that collapse. You will find a big up move in AUD-USD as well. So kind of dates to look out for when this noise area, when this chop area can actually break and you finally get some momentum going, because for the last 2 or 3 weeks there was absolutely no momentum. So that's about AUD. I'll be more looking at CNH. Then we have the FOMC announcement. Now on the 15th of January, Powell said there's not going to be any tapering. He didn't exactly say it, but he insinuated that. And with it, sort of risk rally happened a few days after that. Dollar started moving lower after that. So I'm anticipating that ahead of this event, EURUSD moves a little bit higher, gold moves a little bit higher, and we have a bit of a risk on rally into this event, as he's expected to reiterate that in that statement and into the press conference after that, and all those flows should find a little bit more resolution going into that meeting. The following day, Thursday, we have advanced GDP. Now the number itself, I'm rarely ever a surprise, but I'd like to show you something what happens every time the GDP comes out. It is a pattern that is incredibly repetitive on the S&P 500. So last reading we had was on the 29th of October. I'm gonna mark this out. So 29th of October was here. I put a vertical line there instead of a mental note, just so we get the visual. The one before that was the 30th of July. The one before that was the 29th of April. What was that? 29th April. And 30th of June. I could go back for years, but let's just keep to the few days before it. Can you see that pattern? What is happening here with the S&P 500 as a whole? Always tends to go up, which is kind of funny, but it tends to find its tends to find its mojo back a couple of days or the following week after the quarter-on-quarter GDP report. So here in the end of October, we had this massive bullish reversal. Here it kind of was sluggish and then just went for it. And back in April, sort of the same. Now, this did happen because of the Moderna news. If you remember, we had Moderna coming out that the vaccination efficiency was really high, and then they said no, the studies were wrong, and that created some idiotic moves that were just were really annoying, were out of space. But if you took those headline news away, it really found its mojo again. And same thing here in the end of January. Literally, not the following day, but the next week it started its mojo, and we got a bullish push, and then the COVID came, and well, you know the rest. But you find good positive risk on sentiment after the quarter-on-quarter GDP reads. So if you don't find it if you don't find stocks rallying on Friday, I'd be very risk on mood going into the following week, which starts in February, I believe, into these days, whichever it is. So if you're thinking about buying S&P 500, you're a bit unsure, you think these levels are a bit too expensive, you see a lot of headlines telling you be careful and there's too much risk, you're not sure, buy it either on Friday or buy it into the following week. So I'll be closely watching what the GDP does. I usually tend to use the fixes to work around to find nicer levels to work with. But that's sort of the thing I'm looking at going into the next week. I'm not going to have a proper look at gold because gold has been incredibly difficult to trade because of these mad moves. There seems to be a lot of deleveraging out of gold to buy other assets. If that continues, gold can drop a lot more. In my last weekly review, I said that there seems to be a risk on reflation trade. There's no real need to hold gold right now. Be that as it may, ahead of the FOMC meeting, I can imagine that this moves back up into the 1880, possibly 1900s. Not sure if I will trade it unless I get a really good signal from the yields market, from the 10-year US yield, which is sort of the bellwether for where gold tends to trade, but is right now in this tight area. And from what I'm understanding from my reading from the options market, it is likely to continue this tight area for at least a couple of months. I'm really not interested to get too much involved into gold because the momentum isn't there. What I'm really interested in is next week is to buy EURUSD, capture some upside, head back into 122. We'll be very keen to see what GBP does going back into this area, if it even starts breaking higher and go for an outsized move. That's probably the key things I'm looking for. Going into Friday, Thursday and Friday, I'll be interested to see if I can buy S&P 500 and maybe capture a little bit more upside again. Have a look at the VIX as well. It's been long coming. A lot of market participants, including myself, are really waiting for this 20 level to give away, just to create a little bit more calm in the market, give that sort of more bullish narrative back as well. So this is this week's calendar. Not a lot going on, so there's a couple of volatility pockets that you can concentrate on, and I'm wishing you all the best. This is the end of this video.